Good afternoon, ladies and gents. Welcome to another video brought to you by Total Control Traders. Now, before we get into the market today, I wanted to take a look at something and just have a quick mention of someone who has been with us, Total Control Traders, since the beginning, and I thank you for all his support. He has some amazing picks when it comes to stocks, especially Canadian names. So, for those of you that watched the video last week, we looked over NEO on TSX, and I mentioned that there's two possibilities of what's going to happen here. One is probably sideways action into a bull flag into confirmation, and we're going to see some sort of reaction around this key zone. And the second reaction would be a pullback before an actual move up, breaking over this channel. So ended up being the first prediction being correct. We did see a bull flag on the daily into confirmation right into that key zone, and we are now seeing a little bit of a stall in that key zone. So thank you Kwanzaa for bringing this ticker up. And aside from this ticker, the other one that you brought up that was amazing back in the days was BNGO. And I had a bit of a scare today because if any of you know how to fix the Microsoft Edge keep signing you out of all your websites, if you know how to fix that, please do let me know. It's been happening for 2 to 3 days now, and today when I signed back into TradingView, thought I lost all of my drawings. Whew, that was close. So if any of you knows how to fix that, please do let me know. I know that one way to do it is you go to settings, and then privacy, and choose what to clear when you close the windows. Yeah, all mine are turned off, so that was not it. Do leave a message. I would really appreciate it. All right, so the other ticker that Kwanzaa brought up back in the day was BNGO. Yeah, BNGO. Look at this guy. So I believe he brought it up somewhere around here. 1, 2, 3, 4, 5. Okay. 1, 2, 3. Yeah, that looks right. Towards the end of wave 1, wave 2 kind of thing. That I believe that's when he brought it up. So this ended up being a wave 1, 2, 3, 4, 5, and now we're in ABC, BC. Okay, so this chart looks like it could potentially be ready for that next move. A, B, C. It's not as clear on this next one. A, B, C. Then A, B, C again. So now that's been confirmed. Basically A, B, C, depending on how you look at it. I believe there is a chance for the next leg up that's coming. However, the trend lines don't suggest so yet. We did see another rejection here. So we had two touches on both the top and the upper trend line as well as the lower trend line. From here, there is a short-term Ethereum lower trend line right here. If that is lost, we will be looking at a third touch on the lower trend line. So BNG doesn't look like it's ready to go. The wedge is still quite large, quite dragged out, so it could take a long time before it's ready for the next leg. Oh, come on. Okay. So this is the current wedge right now. There, 1, 2, 3, 4, 5, ABC, C, Yeah, it looks right. So this C could very well keep on coming down to, nope, keep on coming down to right here on the lower trend line. If you're in the position, there's no reason to sell unless we lose the 430. If you're not in the position, two ways to play this, either at a touch of the lower trend line or wait it out, because this could go on for a long time for the break of this upper trend line. All right, so just wanted to mention, Kwanzaa, thank you for bringing all these amazing tickers, amazing moves to the group's attention. Neo, man, what a great move. 2 days after you brought it up too. And BNGO, even, okay, let's say that you called it out at the top of wave 1. That alone was still another 117%. So one thing I also wanted to talk to you guys about, it's when I spoke to him about this ticker, he mentioned that, you know, there's dollar signs popping up when there's at 15 bucks and you're seeing 30 bucks coming kind of thing. That's always going to be the first lesson to learn, to hold a stock, not to hold a stock for too long. You know, this is what could potentially happen if you were to hold, not selling, not having a target ready, not having a game plan ready. And then after that, what happens, the second lesson that you might learn, or most likely is going to learn, is selling too early. So if you held through this whole thing, congrats, you are not in, I do believe you're not in the red yet. 2,900%. I do believe you told me that you're not in the red yet. The must hold, it is right here, 347. That is a must hold. There is a chance that, you know, we come back to gap fill right here, 347, before a next leg up, even if we're to lose the lower trend line. Most ideal is we want to hold this lower trend line. Okay, let's go on to the ticker that you requested today. I can't remember which one it was. Let's take a look. TWM, Canadian ticker again. I love it. All right, TWM. So I took a quick look at this. This doesn't look right. TWM Canadian ticker. So I took a quick look at this earlier as you brought it up. Long-term chart. So this chart is actually looking fairly decent in the sense for a reversal of what it's been doing, potentially likely looking at this upper key zone now. So this was a key trend line that had to be broken for any longer term, if you're looking at weekly, monthly kind of thing, longer term bullish action that might show up. 1, 2, almost. So depending on how you draw this, if I were to move this lower, you know, you can touch these two, but regardless, that's at least at the very minimum 3 rejections on this upper trend line and 2 supports on this lower trend line, which is now we can see increasing momentum. If we were to look at the daily now, 1, 2, 3 touches on this lower trend line on increasing momentum, and we broke over. So we broke over these this key trend line, key upper trend line, came back to back test this increased momentum trend line, middle trend line, whatever you want to call it, and then now we're shooting over it again on increasing volume. The only concern that I may have on this ticker, the only concern that I may have on TWM is earnings coming up on August 5th. So watch for a reaction, but based on the volume, based on the price action, I do believe that we will see a break of this 144 into trading view. Has been a bit weird, eh? You guys saw that trend line going sideways. Anyways, so into 155 seemed to have a lot of reactions. So there's been 1, 2, 3, 4, 5 reactions around 155 to 157. Watch for that lower part of the key zone, 155 to 157. That would be the first target. Following that would be the upper end of the key zone. And as of target wise, let's take a look at what the target looks like. Now this may be fairly high. Nope. that actually makes sense. 120 extension target right at the top of the key zone at 164. Look at that. Lines up perfectly, 164. So that would be the where I would anticipate some sort of bigger reaction. First reaction is going to be around 155. Following 164 would be likely, if we pass through 155, we'll likely start anticipating a lower high to form from 164. Okay. All right, so that's it for Kwanzaa's request. Make sure you keep an eye out for whatever tickers he requests, and I do always mention names of who requested what tickers. And thank you, Kwanzaa, for bringing all these amazing tickers. Next is the market. Let's start with the big BTC, Bitcoin, BTC. What am I doing? Bitcoin. Okay. There we go. Thought I lost my drawings again there. All right, so we are trading over the key trend line now. Blast it straight through it. We are seeing having trouble over here on this major resistance, which was previously major resistance again. Not really major support. It could be another level right here. So once this 40,682 is broken, I would be looking up at the top of the key zone at 42,000, where we can see some sort of reaction here. Two slight supports before breaking down, and then one slight rejection here. So 42,000 is the most notable. As of now, 40,682. We saw lots of rejections, having a little bit of trouble. So this might be getting tight. There is a high possibility that we can see bull flag formation from here. This being the pole. And watch for the flag formation. Today is an inside bar day. Or is that today? Yeah. So today is an inside bar day. Indecision. Might take a couple more days for this to form. If we do lose this key trend line again, that is a little bit of a concern. And watch for the volume. Tomorrow, if we see increasing volume, there is a chance, increased chance that we're going to see a loss of this key trend line. Next is SPX. So SPX, we made a new all-time high today. Huge upper wick into the close. I believe this was formed after hours to 130. Okay, so going into after hours, 1, 2, 3, 4, 5, 2.5 hours straight selling going into close, starting at 1 p.m. Eastern time. Then from there, partially due to Amazon's earnings, I say big part due to Amazon's earnings, the market is seeing huge sell-off, which is currently still healthy. So over the last 2 days, there has not been too many trades that's been placed, partly due to this choppiness of price action in the market. If we look at the daily, it's been red or full green, closing near the high of day, right at the 1-to-1 extension target from this last leg of move, this last notable big bull movement. 1-to-1 extension. Let's see, we held at 88, slight bullish action, huge upper wick, slight bullish action, huge upper wick. So there is a little bit of concern in the market now, and we are seeing after hours going into tomorrow starting with bearish action. See, this is the cause for concern because we did lose and close under the 8-hour 8. And then from there, so we lightened up our positions. It's just been choppy action from there. Next is NAS. Same idea, choppy action. A little bit, the weakest of the 4 indices, I would say. We are trading under the daily 8 now. And did we ever get to that extension target? 15... Nope, we were 7 points away. 6.4, no, 7.2 points away. Really close. So we saw a back test of this previous high, a little bit wick under, closed right on it, and then bullish action. Now we're seeing double upper wicks. This is a little bit of a concern for NAS, but as mentioned, we are expecting a sector rotation between from NAS, the big tech, going into small caps, Russell, we are seeing relative stronger, more strength versus NAS. As of right now, it is actually a little bit weaker, 0.11% off. But if we were to look at the daily chart, it's been NAS has been stalling 1, 2, 3, 4, 5, 6 days now, whereas Russell, we broke both. We back tested the support, broke both, back tested the lower trend line. Now potential for a inverse head and shoulders. Saw some confirmation today, but big upper wick. A little bit of concern for Russell as well. So overall, the market, be cautious. There's a lot of trend lines on Russell just because, partly because I'm keeping a very close eye on Russell. I want to see what this hourly lower high, 4-hour lower high is going to look like. 4-hour has been a straight shot since the back test of this trend line. Look at that amazing close right on the trend line, straight shot up. And now let's see what the 4-hour higher low looks like. Assuming that is the top, 0.382 lines up with this long-term support resistance at 222 or 2224. Yeah, 2224. We can see lots of price action, support here, rejections here, supports here, again, and support again, then rejections here. So 2224, very notable. 0.382 lines up exactly with it, off by maybe a few cents, but watch for a reaction here. As a bull for Russ, this would be one of the most ideal spots for bulls to hold. If not, it might make sense for a back test of the 0.5, which lines up with his previous resistance, short-term resistance line. So I don't think this one is going to work. This previous 1, 2, 3, 4 rejections. Very notable trend line right here. So even if we're to reverse from the 0.5, I would anticipate further upwards price action to come. The big red flag would be if we were to lose the GP. Okay, let's take a look at US dollar. Okay, so US dollar is pulling back a little bit. Nothing of major concern yet. Seems like it could be increasing momentum going downwards. This trend line must hold for US dollars, or else we'll be looking down at 88,233. So no major concern from US dollar yet. Based on this, it makes sense the market's pulling back a little bit. I would anticipate further bullish market to come in the future based on the drop, the current drop. US dollar and market, the relationships, was it beta, alpha? Yeah, it's been a while since I studied CST. One of those two, the correlations, is inverse, or it should be inverse. US 10-year yield, bond yield, still trading under the key trend line. Slight bearish flag right now, slight bear flag right now. 1, 2, I'll give it 2 to 3 more days to see if there's confirmation of this bear flag. RSI is not oversold, could very well see another leg down. Gold is going up from the 0.5. Okay, let's clean this up here. Okay, so gold held 0.5. Right now is a double top, slight bearish divergence on the daily. Price action downwards, RSI upwards. So slight bearish divergence. If you're in gold bullish, there is no real concern for real concerns yet until this 0.5 is lost. All right, let's take a look at some hot tickers. Well, actually, there's let's see, HIVE still in the wedge, trading between the two key zones. QS. Okay, so QS, there is a potential here. That is an easy trade, if anything. We saw decent bullish action with volume yesterday. Today is a little bit cause for concern due to the volume and the sell-off from today. We did see a bounce right at that top of the key zone. Tomorrow, ideally, you're going to want to see a hold of that key zone and just continuation. Yesterday's move, it does not look like it was a lot, but if we're counting from the close of the day before, the move was 13%. So from here, there is a low risk trade. If you were to enter here, the risk to reward, the risk is 6.45%. The reward is potentially 38%. So that's about 6 to 1 risk to reward. I think it's fairly decent. Stop would obviously be right under yesterday's low, or not yesterday, the day before's low, Tuesday's low. And the only problem is we did lose that daily 8 right after we finally broke it on volume. QS looks okay. Low risk trade, 6 to 1 risk to reward, if that's something that interests you. Next is AMD. So the hot tickers, AMD, DKNG. Nope. What did I have marked down? AMD, Tesla, Amazon, utilities. Let's take a look at them. All right, AMD, huge bull action today, increasing bull volume on after earnings price action. Yesterday's move was from close. Yesterday's move was a 7% move. Today's move was a 5% move. So slightly lower. We are seeing a little bit of that upper wick forming, especially with the market pulling back. There is a little bit of a concern on AMD, but it is in blue sky high, new all-time high. Blue skies, new all-time high. Increasing bull volume. If you're in bullish position, there is no reason for selling. Use the hourly 8. There you go. I will use the hourly 8 as my guide. We have not closed under the hourly 8 for shorter term wise. If you're looking at longer term for potentially writing this out, depending on what you're in. So let's say if you're in commons, I would say probably use the 4 hours. If you're in options, hourly 8 would probably be better, a better guide for you, so that the premiums don't get killed as much. So after hours, we are down a little bit, partially due to the market. But based on how much the market is pulling back, how much Amazon is pulling back, this is not a cause for concern yet. Next, let's take a look at Amazon. Amazon had earnings today after hours. Huge sell-off. Congrats, Amazon bears. Look at this. Holy. From close to after hours right now, it's a 7%. Trading view saying 7.22% sell-off. So earnings was green, but revenue was EPS was a beat, revenue was a miss, and I believe the next quarter's guidance was weak, and that was what's mainly causing this sell-off. We did go straight through GP, straight through, stalling at the support a little bit. Let's take a look at redo this GP. Are we at GP if that was the case? Just under. So even if we were to draw the GP back from the wave 1, 2, 3, 4, 5, very clear, and we anticipated a ABC pattern. So the A has formed, the B has formed, and now the C is likely to form partly due to this earnings. I remember what I said, that doesn't matter what the events are, they tend to line up with the charts, and this is why we don't really look at the fundamentals. We focus on, well, we do look at fundamentals, but not as much. We focus on the charts because the charts will tell you, most cases, 90% of the time, where the chart's going to go, what the reactions on earnings or whichever is going to look like. So ABC, this is currently still playing out. And originally I had anticipated that ideally we hold this double trend line intersection here, which was the pandemic trend line, along with this previous resistance trend line. Intersection should be strong support. So tomorrow, watch for what the price action looks like in the morning. That first 30 minutes, is it going to be a dip buying or is it going to be a straight sell-off? Now, if we were to look at the previous earning, one that's been red, the notable red, the notable gap down was right here. So we did, on that one, we did sell off for 7.6% as well. But keep in mind, over the next 6 days, we went back to fill the gap. So 90% of the time, again, 90. There's no actual statistics on this, but I would say 90% of the time, gaps always get filled. So when we see, if we see a gap down open this far, minus 7% tomorrow, I would anticipate the gap to get filled over the next 2 weeks, 3 weeks kind of thing. So even if you were to pick up some commons and just hold it right now, I would anticipate that there is profits to be made. It is a little bit riskier, especially seeing this kind of gap down, but that's generally when the best opportunities are provided. Double rejection, support, and just blew straight past that. Blew straight past the intersection, straight past the GPs. Wow. Overreaction, I would call this. Okay, next is Tesla. Bullish action today. Amazing action today. Out of the gate. Let's take a look at the 5-minute chart. 155, yeah. So it was a slight gap up and increasing bull volume. That was the gold signal. And then from there, a little bit of a red flag, increasing bear volume, but it was notably lower than the opening increasing bull volume. This was the actual slight red flag. But if you look at the 5-minute 8, we never lost it, and next leg up. Then from there, we saw a slight rejection from the trend line, the key trend line that should be broken, have to be broken. So let's take a look at the longer time frame. On the longer time frame, the must break trend line for bulls was this green wedge, this wedge that we've been in for ever since December of last year. So it's been 7 months coming up, and we finally broke over the wedge today, but we did not close over that short-term upper trend line. So still, especially with the market pulling back, I would anticipate a lower open. Well, after ours is a little bit open, a little bit lower, still relatively strong. Keep your eyes on Tesla. I'll be looking for entries if we get a back test on this lower trend line again. Tesla looking very bullish. Upon the loss of this pandemic trend line, that's been 1, 2, 3, 4, 5, 6, 7, 8, 9 bounces on this pandemic trend line. Upon the loss of this trend line, we'll be looking at lower prices. First GP, second this 550 zone, lower part of the key zone. First will be here, second will be here. Ideally, we want to hold the back test of right here. All right, next is PLTR. So a lot of names today had faded going into the close. I have to cut the video a bit short here. So let's go over the tickers that faded. First, the PLTR. It held up well. The dip got bought and then it faded throughout the end of the day. Next is DKNG. Same idea. It dip got bought and then faded throughout the day, closing near that low of day. But both of them, there's no real cause for concern yet. Both of them are holding the 88. PLTR is a little bit weaker, closing right on the 88. Next is ABNB. Same idea. It faded, but between the three, Airbnb is the strongest of the three. Based on the daily candle, yeah, Airbnb is the strongest of the three. We did close over that key resistance support, so no real cause for concern yet. Based on the market pulling back, tomorrow is going to be, I would say, a little bit of a key. We're going to need to see some dip buying pressure, ideally. If we don't, then we're going to start be real concerned about whether if this daily bear divergence on both the NAS as well as the SPX is really going to play out now. Okay, and anything else? Oh yeah, okay, last two. Air Canada. So Air Canada is in the daily bull flag formation right now. We are having trouble with this resistance zone between 25.41 and 25.80. Once this is broken, I will be looking up at the upper trend line. If this is rejected, then I will be looking down first at this lower trend line, this lower support zone at least, and then following that would be the key support of 23. That must hold. And the other one, very similar for our US friends, would be AAL, American Airlines. Same idea, daily bull flag formation. We did close slightly under the 88, having trouble with that key resistance support at 21.77. Once that is broken, there is a lot of upside. Ideally, I can see us going to the upper part of the key zone on this next leg move up. But first, watch for a reaction around 26. There's been 3 big upper wicks, 25.94. Right, so that's it for today's video. Thank you guys for watching. Hope you guys enjoy the content. If you know anyone who can benefit from the videos that we provide, please share our channel and make sure to give a thumbs up. Thank you for watching. I will see you in the next video.